Good morning, y'all. Let's do a quick audio check. Make sure you can hear this soothing voice, and then we'll get going here. But it is, what's today? Today is Wednesday morning. So we are at the halfway point here for the week. All right. I mean, this is funny stuff. So take a look at the volatility index. So yesterday was interesting. So, coming into the session, we get the CPI numbers and, the Qs roll over a bit, and roll over is probably not the best choice of words there, but let's just take a look at the hourly chart. So we're rolling into yesterday morning, we get the CPI numbers, and I'm just pretty much a cluster you-know-what for the rest of the session there. So we get the big fade into the open, we get the big pop into the afternoon, and then you get the fade into the close. And here we find ourselves this morning creeping right back towards that previous all-time high. So I do think for the Qs here, just with it being a psychological number, I can see us making the push here into 15,000. Where we go from there, we shall see. But just continues to be a tough market to short. So, we get these little momentary, call it breakdowns. There's been a few over the last few weeks. We get these very short-lived spikes in volatility, and right back down we go. So I think for the time being, like we talked about on Monday morning, yes, the market is extended, so you just scale down a position size, but I think you continue to look for opportunity in the path of least resistance, which until this chart completely breaks down, path of least resistance is to the upside. So let's look for a few different lower time frame squeezes on the indexes, which always, I think, serve as a great compass heading into the open. A lot of times we're going to get that choppiness. In the course of the choppiness, all the market is really doing is going into a new squeeze. So on the 2-hour chart, you got a squeeze here for the SPY futures, and no hourly squeeze here just yet. But I like to look for these squeezes on the futures and use them as that quote-unquote compass. So, already heading into the open, my bias would be towards the upside because you have a 30-minute squeeze that's firing long. And we still have the structure here to a 2-hour squeeze. If that fires long, there's a push to all-time highs. So the 30-minute and the 2-hour squeeze there on the SPY futures. Nice little compass before we set sail here this morning. And let's check out the Qs. Do we have a 4-hour here? So we do have a 4-hour. Obviously, those can lead to pretty powerful moves. So a little bit of back and forth, but all that really does is give us a bunch of squeezes. So we do have a 4-hour. Let's check up on the 2 here. My mic is doing an echo. Hold on, give me 1 second, y'all. Let me throw the cell phone out the window. All right, I'm back. Sometimes the cell phone messes up with the interference. So hopefully we're sounding a little bit better here. But to the Qs, so we have a 4-hour. We do have a 2-hour squeeze. And we've got a 1-hour squeeze. So unless these completely break down and lose structure, my bias heading into the open would continue to be towards the upside because of the structure here of the lower time frame squeezes. So I think that's the name of the game here today. Do those lower time frame squeezes continue to fire long, and is it generally just more of the same, this continuous grind higher? So I'll stress again, we are extended. So any given day now, we could easily wake up to a 2 to 3% gap to the downside as the market comes back to the 21. So the reason you want to scale down a position size is that if that does happen, you're taking a paper cut and not all kinds of nasty losses. So a few different things I want to focus on here. Let's take a look first at some daily squeezes. Again, I think you trade these with a bit of a smaller position size here as the indexes are extended. But we'll take a look here real quick at a few of them. So the first one here is Broadcom, AVGO. This is pretty much That's my go-to setup. Daily squeeze, you have stacked EMAs, and for Broadcom here, looking for a move into about 500, right around 3 or so ATR. And if you look at the weekly chart here, which I think is just as important, there's a beautiful weekly squeeze setting up as well. So I like the weekly, I like the daily there for Broadcom, and I think you can look to play this with, again, smaller position sizes because the market is extended, but that's got a good structure to it. So I do like AVGO. I also think Salesforce here has got a great looking chart as well. So we've got the daily squeeze, we have positively stacked EMAs, and if we just take a quick look here to our weekly chart, it has a weekly squeeze that's currently firing to the upside. So I like the daily squeeze with a little bit of weekly action behind it. So I think as long as the market holds up here with Salesforce, ultimately looking to see if this daily squeeze can fire to the upside. Now, one interesting observation this year is with the Squeeze Pro here. Once we start to get the orange dots, it's the tightest squeeze you can get. Right? It's the highest compression squeeze. Just an observation this year has been interesting. A lot of these high compression squeezes, even in a bullish trend, seem to like to fire to the downside. So at least take that into consideration. But I do think with the weekly squeeze there, that's some pretty good looking stuff. Another one I like here is Yeti. Everybody loves a good cooler, but a picture perfect chart. Awesome daily squeeze. You can see the histogram is turning positive, so momentum's picking on up. We got stacked EMAs, and quick check here for the weekly chart. And this is just a beautiful weekly trend with a weekly squeeze that fired, about a few months ago, still in the process of firing here. So it holds its 8 EMA, really good trend. You get stacked EMAs, green 10x bars. So for Yeti, loving the looks of this one. And as always, I would be looking for a move from the 21 EMA into about 2 or 3 ATR. On a name like Yeti, 2 ATR is pretty solid. It's not necessarily going to be a market leader, but it's got a great looking structure. And a lot of times with these daily squeezes, you're going to have something like a 4-hour squeeze just setting up right underneath the surface. So AVGO, CRM, Yeti here, and there's a couple more. I think CLF. And y'all should notice these are just exactly the same setups. It's nothing different between all of them. Daily squeeze, positively stacked EMAs, and the weekly chart has to have that bullish structure as well. So for CLF here, super bullish weekly chart, right in that 8 EMA. I'm not going to be looking for a trade here because earnings is what's that? Is that next week? Earnings is like next week. So a little bit too early for me here. But those are a few good looking daily squeezes. So, we're not going to have the Amazons, the Microsofts, the Nvidias and daily squeezes right now. They've already fired daily squeezes. So they're running on all that momentum. So even as the market is extended, there's still some good looking daily squeezes setting up. You take them with smaller positions just in case the rug gets pulled out from underneath us and we do get that pullback. Not saying it's going to happen, but that's proper risk management. So there's a few daily squeezes now for some lower time frame action here. We talked about Shop on Monday. I think Shop is still a great candidate. Now, as of yesterday, we do have a new daily squeeze setting up, which could potentially mean Shop spends another few days chopping back and forth. But with the bullish structure, stacked EMAs, all the green 10x bars, and then a beautiful 4-hour squeeze here, I'm not going to be surprised if Shop takes liftoff here sometime soon. So if you're looking for the continuation of that momentum in a stock like this is one of my favorite spots to do it. You wait for the break in the action. You wait for a pullback to either the 8 EMA or the 21 EMA on that daily chart. And then you're waiting for something like this to set up. Super bullish 4-hour squeeze. Stacked EMAs, all those green 10x bars. So I think that 4-hour squeeze in Shop, right on that daily 8 EMA, that could lead to your push into brand new all-time highs. And a bit more of a bigger picture perspective here, all Shopify is currently firing a weekly squeeze. Now, just because it's firing a weekly squeeze doesn't mean it has to make a crazy move, but just as a little bit of a reference, what kickstarted Nvidia's crazy rally? It was that weekly squeeze firing long. So potentially squeeze for squeeze here as Shopify starts to fire that weekly. We're looking for those pullbacks to the daily 8. You're looking to catch that bigger picture momentum, but you're picking your spots wisely. You're not going to blindly jump in here just because it's firing a weekly squeeze. You're going to wait for something exactly like this. It took its first leg to the upside. Now it's taking a bit of a break in the action, but that 4-hour squeeze, it's catching its breath, it's catching its breath, it's catching its breath, could be the continuation, very much like over here. 4-hour squeeze, big run higher, and then we're catching our breath, right? Catching our breath, holding structure, but going absolutely nowhere. Then you get the next leg to the upside. So obviously, if the market rolls over, Shopify is probably going with it. But if the party continues here, you got a beautiful weekly squeeze firing long. You got good support on the daily chart right near that buy zone at the AEMA. And now under the surface, a whole bunch of squeezes popping off. I really like that. And for those of you who are in the options room, that's the same exact trade we did last week on Amazon. Amazon just made a big leg to the upside, pulled back to the 8, went into that 4-hour squeeze. Then you caught the continuation out of there. So I think Shopify, from that perspective, really looks attractive here. And then I think Nvidia looks attractive from the same perspective as well. So keep in mind, Nvidia is going to be doing the stock split, 4-for-1 split on the 20th, which, what's that, next Tuesday? Right, next Tuesday. So take that into consideration. But you got a crazy bullish daily chart. As many of y'all know or should know, the weekly squeeze fired long handful of weeks ago. So that's what's provided all this crazy momentum. And now here we are on the daily chart with a little bit of a break in the action. And all we're doing here is hanging out right at that AEMA. Now on top of the AEMA, we got just like Shopify, just like that Amazon trade example, you got a beautiful 4-hour squeeze here. So if Nvidia is going to continue higher and push into new highs into that stock split, that's the kind of structure you're looking for. So all I'm trying to do here is when the market gets extended and when the market is moving with so much momentum, I've got to be mindful of the fact that, I'm probably not going to get that picture perfect daily squeeze in Nvidia where we're just collecting dust near the 21. That's my favorite swing trade. But as we fire weekly squeezes and the market's going crazy here, we're not going to get that plate of opportunity. What we are going to get is that momentary break in the action and a beautiful lower time frame squeeze on top of either your 21 or your AEMA. Call it a continuation trade. What I'm really trying to do here is pick my spot wisely on a few lower time frames to catch the continuation of all that momentum coming out of the weekly squeeze. It's a bit of a different entry. It's a lower time frame, but the principles are still the same. I'm looking for a squeeze. The squeeze has to have a bullish structure with stacked EMAs. And then really just depending on if we're close to the 21 or extended, that gauges the position size. So all day long, I'll take a 10, 12, maybe 15% position inside of that daily squeeze. When I'm just trying to milk the rest of the continuation and the momentum here, I might take a 2 to 5% position, just in case we finally do come back down to earth. So those are a few things I'm keeping an eye on. Now, a few weekly charts here that I like. Take a look here at Peloton. Now, Peloton also has a really good looking daily chart. So I think if it just continues to chop for a few more days here, we should be looking at a brand new daily squeeze, I'm going to love that. I love that, that nice rhythm of a potential trend. Daily squeeze, first leg to the upside, take a breather, brand new daily squeeze, fire to the upside. That's such a nice rhythm to play as a swing trader. So I do like the daily chart here. I think we get a new daily squeeze, maybe even today. We'll see if we get the black dot here. But that's a bullish structure to your daily chart. And I really like the weekly chart as well. We're back above the 21. We've successfully held support above it for the last month or so here. Notice how the histogram is finally turning positive. So this is potentially like the very beginning of Peloton building a bullish foundation to its weekly chart. When the histogram is negative with the red bars and we're under the 21 EMA, it's a loss of structure. generally the path of least resistance at that point is to the downside. But once you're back above the 21, once your histogram starts to shift from negative momentum to exhaustion of that negative momentum to positive momentum, and you got positively stacked EMAs, could potentially be the beginning of that trend back towards the upside. So I really like the Peloton weekly chart here. And the nice thing about Peloton, two nice things here. Earnings isn't until September 9th. At least that's the estimate based on old toss here. So plenty of time till earnings, and Peloton has a lot of premium. I mean, you could sell a put credit spread for August expiration with short strikes at 100. So we're talking 20% under the current price, and you can get like a 4-to-1 risk reward ratio. There's just a lot of good, juicy premium there. So I'll be thinking about doing put credit spreads here on the Peloton underneath the weekly 21. And at that point, I'm just asking it to hold support, and I can collect that premium. So I like Peloton from that perspective. And from the same perspective, and from the same perspective, I like Tesla here as well. Tesla is trying to put in that foundation to build in a good structure here to the weekly chart. The histogram has turned the corner. We're not quite positive yet, but we've gone through that exhaustion phase, red to yellow. We're back above the 21 here, and we have positively stacked EMAs, and we got green 10x bars. So good looking weekly chart. What I'm thinking about doing here this week is selling a put credit spread for next Friday's expiration with short strikes underneath the 21 EMA. So earnings is in a few weeks here. I do like the potential that with that good looking weekly structure and with a decent looking daily structure that we could make a push here into earnings. But the bet that I want to place is that Tesla here can simply hold weekly support next week, meaning we're not going to close under the weekly 21. We're not going to close under 650. So I don't quite need Tesla to rally here. I just need it to potentially hold support. And there should be some pretty good prayer. So those are a few things I'm keeping an eye on here in this crazy market. I like that Peloton. I like Tesla here. And then the entire semiconductor sector, I think, looks great on the weekly chart here as well. SMH, just the semis in general, really bullish weekly chart. Histogram's positive. You got the squeeze, you got the stacked DMAs, the green 10x bars. So obviously, as goes the semis, you're going to get the same structure in a lot of the individual stocks. AMD's got a great looking weekly squeeze. I think that Taiwan, TSM, really good looking weekly squeeze as well. So there's a few things on the weekly. Then there's a few daily squeezes like Yeti or Broadcom or Salesforce or CLF. And then there's things like Shopify and Nvidia that have already shown signs of strength. And you're looking to see where those 4-hour squeezes can take you. So let's run through them all one more time here real quick. TSM was another good looking daily squeeze. But I think Yeti is clean here. That's a clean setup. I think Salesforce, CRM, I think that is a clean shut-up. I think CLF, that be a clean one. And I think AVGO, Broadcom, that's a clean daily squeeze as well. And then for the lower time frame stuff here, you got the behemoth formerly known as Nvidia with a great looking 4-hour here. And then you got the behemoth known as Shopify. Come on now, if I can spell. The board's giving me a tough one this morning. There we go. And I think Shopify, you got a beaut of a 4-hour squeeze here as well. So those are the things that are piquing my interest in this market. And obviously, I want some Google. I want some Amazon. I just don't want them bad enough up here at 2 to 3 ATR. So, I mean, believe me, like with zero hesitation, I would start to sell the crap out of put credit spreads on Amazon if we came down to the 21 EMA. It's going to be a pretty aggressive retracement, though, at this point. We're talking, we'll call it 3,700. It's 150, 160-ish points. So I would be all over that. Zero hesitation. If Google here If the old Google wanted to come on down to the 21, again, with zero hesitation, I would sell put credit spreads there. But I just don't like aggressive entries up here at 2 to 3 ATR. So they look incredibly bullish. My assumption is Amazon, Facebook, Microsoft, Google, my assumption is they probably continue to rally here into earnings. Selfishly, I hope it's not the case and we get a bit of a pullback because I want me some more Google and I would like me some Amazon. Apple's just cooked here, plus 3 ATR. So that probably rallies into earnings. Just not where I can come on in there and plant my seed, so to say. Microsoft, just a total beast. Total beast. So tech's been your leadership. The structure of the other sectors out there, some are decent, some are just downright pretty ugly. If tech just keeps leading the way into earnings, none of it matters for now. So it's one of those things where it doesn't matter until it matters, until the market finally throws in the towel here. But looking at the transports, for me, this is a short only. Negative histogram, red 10x bars, no stacked DMAs. I would probably short the transports on any bounce to the 21. It's not a bullish structure here. Financials, now they're kicking off earnings this week. You had Goldman. And it's not the worst. It's a daily squeeze. The histogram is positive. We're at the buy zone. I wouldn't trade it, though, because we don't have positively stacked DMAs. That's one of my ground rules. So the financials, they don't look terrible. We'll see how earnings goes over there. Energy is XLE. Yeah, to me, that's not a bullish structure. Histogram's negative, no stacked DMAs. You're under your 8 EMA. You're under your 21. But I think this has zero impact on the market as long as tech is doing its thing. That's a reality right now. The market is pretty much Apple, Microsoft, Nvidia, Amazon. If they keep going, the party probably continues. How about industrials? XLI. That's not bad. It's actually pretty clean. I like that. It's a good looking daily squeeze in the industrials. I think we covered this on Monday. The individual stocks within the industrial sector, they're not really piquing my interest here. I'm definitely not going long Caterpillar with red 10x bars and no stacked DMAs. That doesn't mean Caterpillar doesn't go higher from here. It's just not my setup. For 3M, Maybach Music, this looks pretty solid. But there's no stacked DMAs, so I can't trade that. And then there's UNP. It's just a little bit sloppy. So my pick here as far as what sector I think is the most attractive, obviously technology, but I want to pull back. I also like the semiconductors. That's a good looking daily chart. So all things I'm taking into consideration here. So take a look at the futures. And what do y'all think? Do you think we're going to hit a new high here today? Yay or nay? All-time high or what? What do you guys think? I'm going to say yes. That way the market will hear what I said and do the opposite and give me a pullback. Dustin, my pleasure. Got to try this. Yeah, Amazon, I think, is July 27th. We'll take a look. Don't quote me on that. But I do think earnings is the 27th or the 29th. It's somewhere in that neighborhood, end of July. Let's take a peek here. Earnings estimate of July 29th. So we're getting there. We are getting there. Yeah, say yes until it doesn't, right? That'll work. Listen, when it comes to like the Amazons, just the tech names in general here, really use Nvidia as your poster child right now. Because I've been sitting here for like the last 3-4 weeks and it's like, my God, Nvidia's extended. As a student of the squeeze, though, I should have a much different perspective. The move at Nvidia actually makes 100% sense. Like it makes complete sense here. We fired a weekly squeeze. So think of the rule of thumb that JC likes to teach. Once a squeeze fires, you're looking for 5 to 8 plus bars of momentum on whatever given time frame that might be here. So from that perspective, Nvidia fired a weekly squeeze and it's ran 1, 2, 3, 4, 5. It's ran for 6 weeks. That's pretty much what the indicator is trying to capture here. So, a lot of us are, what I think we could call students of the squeeze. Well, from a weekly squeeze perspective, this makes 100%, doesn't it? You just released a can of whoop ass here with all that momentum, and you're talking 5 to 10 bars on a weekly time frame. So, is Amazon extended here? You betcha. Is this where I want to take a huge entry? Definitely not. Does Amazon have the potential to be extended for the next handful of weeks? Absolutely. Because you're 2 weeks in to firing a weekly squeeze. We can look at a daily chart of the Q and say, what the hell? This thing's been at 2-3 ATR for weeks on end here. Guess what? What are we doing here? We're firing a weekly squeeze, and we're 2 weeks in. So I think Nvidia is a really good, again, call it a poster child here for the type of momentum that can be behind a stock once it fires a weekly squeeze. If we look at the previous one here, look at all that momentum you got. All of that coming out of that weekly squeeze firing long from back over there. So I do think a good, healthy perspective. It's like, geez, when are these things going to come down to earth? Well, probably when the weekly squeezes run out of steam here. The S&P 500, not so much, but all things I always find interesting. But we'll see today. Qs are getting close. Qs are getting close to the previous high. And I just think 15,000 for no other reason than it's a big, call it psychological number, and it just sounds good. An all-time high of 15,000 just sounds a lot more sexy than an all-time high of $14,994.75. But listen, y'all, market's going to open up here in about 15, 20 minutes. I got to run a quick errand, and I'm having contact lens issues. I'll keep it as simple as that. So I got to hit the ground here, or I hit the door rather, and I will talk with y'all later on. Now, before I cut y'all loose, real quick, give me just a sec here. Let me give y'all the link for tonight's webinar. And again, I appreciate everyone who came out for the webinar last week, and a lot of y'all, a lot of familiar names have signed up for the class this coming Saturday, which I'm really looking forward to. And don't forget, if you did sign up for this Saturday's class, we're doing the put credit spread lesson Friday afternoon. So this is all recorded, but don't you forget. Where is this webinar link? There we go. All right, let me hook y'all up with that. Then I'm going to go take care of these eyes of mine and see what this market's got. All right, there's a link in the chat. But listen, everyone, I appreciate you spending a good, 20, 30 or so minutes with me here this morning. On Friday, Chandler will be taking over the prep. So enjoy that. Enjoy the rest of your week. Trade safe. And I'll talk with all of you soon. Thank you very much.